Hey guys, welcome to my channel Success Sequence where we daily analyze Nifty and Bank Nifty's important move and expected level for the next day using a strategy that I have been using for quite a time now. So if you want to learn that strategy, make sure you check out the video description of this particular video, and where you will find the playlist systematically mentioned step by step. So if you want to try the strategy, I'll request you to try it, but don't jump your gun. Don't try trading with your own money first. Do some paper trade, and if you find the strategy comfortable, the system comfortable, then only try with your real money. So now let us come back to our analysis. As I mentioned in my previous video, we did see a bearish crossover, and the technical indicators were hovering around to its 55 days exponential averages. So I mentioned that if that averages do not hold and the indicators broke below that particular level, you can definitely see a good move. And to make the thing worst, I also mentioned that the volatility has now gone very low, and any increase, any spike in volatility and break in technical averages will take market further down to a very low level. So we were expecting a level till 10,250 if the level gets or the range gets broken, and the indicators that I have suggested for the technical analysis like MACD, RSI and CCI, that did happen, but we did not take any particular trade, and the reason why I'm going to explain to you now. So what was happening is that the contradictory position was getting formed, and suddenly the market saw some sort of good build up in the option chart data towards the bearish side. So in this kind of move, what happens is, if you take a particular move, and since the market has been trading or has been taking a good support near its averages, what happens, any sort of jump in the in the particular prices, or the any sort of jump in the volatility will make can make the things worse for you. So as the expiry day was there, and if you want to trade, because the time decay was going to happen very fast, so any sort of bad move and further spike in volatility can take so much of our money. So that's the only reason I avoid trading on the expiry day, and the added reason was I also just mentioned to you. Now if you want to trade further, what you can do is you should observe the market first, try my strategies as mentioned in my video playlist, observe it, do paper trade, and then if you find it comforting, then only trade with your real money. I am not a SEBI registered analyst. I am just sharing how I am trading in the market. If you want to copy, you can copy at your risk, but I am not I am not, and I should not be hold any sort of responsible whether it's a profit or loss for any of your trade using my strategy. So having said that, let's analyze the option chart data first. So for the next series, I can see that the Nifty is suggesting a 10,000 to 10,500 kind of broad range. So 400 points on downside and 100 points on upside. What I can see a good sort of call writing has happened. These are the naturally the rollover data I'm talking about. So 10,250, at which the market is trading right now, has seen a good amount of call writing. So this do suggest that the market participants are sort of cautious of the Nifty trading on a high side, but as we go further, the call writing is getting more and more aggressive. So it is not only suggesting that the market participants are bearish at this particular level as well, but on a high side, I can also see that 10,400 and 10,500 has seen a good amount of call writing getting formed. So if you see in tomorrow's market tries to break on a higher side, or for that matter on a lower side, if you see some sort of addition in the call writing side, you should better be cautious, because this suggests that the market participants are expecting a stable to bearish kind of market going further. If you see the put side, I can see a good amount of bearish rollover in the strike prices of 10,000 to 10,300. The option chart data suggests that the change in open interest is also quite aggressive, particularly at the strike price of 10,050, 10,150, and 10,250. So market participants are expecting a bearish move, and 10,000 is the level that they are expecting. So if you have watched my previous video, I also mentioned that 10,250 has been a good support for the market, and the put writing has happened. So if you have observed today, market has not gone below uh, much, I would say not gone much below 10,250, and it is now trading at 10,226. So on a higher side, I can also see a fresh bearish position getting formed. So since the market has depreciated so much, we are naturally going to observe a call writing and bearish position only. So we should not consider the broad data that the market is suggesting right now, because naturally the market has gone down and it's a low rollover data. So this conveys a sort of a broad expectation of the market participants. So we'll analyze in detail market by having a look at the candlestick pattern, moving averages and technical indicators and what they are suggesting. So if you guys can see, you can just observe that the market has been taking a good support at its 55 days exponential moving average. So simply by observing the candle chart behavior on a previous time frame, you can naturally see that if the market goes down below this particular level, you should not go short immediately, rather wait for the next day's candle to form. Because what happens is the market it will take a support at its 55 days exponential moving average, which is definitely going to be on the side of bullishness. Because you can also try and check market for the various time frames. You will find that the 55 days extension moving average has been good support for the market. However, if you see, whenever it has broken, we can see some sort of dip going further. So what you can do is you can wait for the market, and if it closes below its 55 days exponential moving average, and option chart data on a spot price basis suggest a good amount of call writing and a fresh bearish position, then you can go short with the expectation of gap down opening on Monday. Otherwise, better you wait and watch how the market trades. Ideal scenario would be wait till the next two candle, observe how the market behaves. What should be the expectation is the market either should take a support at its 55 days exponential moving average, or go bit down. In either case, the next candle will be very important, because after the Friday's candle, the Monday's candle will decide the market tone. So if it opens on a higher side, we can definitely expect a rally to continue on higher side only. And if the market goes on the lower side and the MACD generates a bearish crossover, goes into negative zone, you can expect a very furious down move in the market. Because on a bearish crossover on a zero time frame suggest a good sort of writing. And if you see, whenever the market has broken this particular line with a bearish crossover, we have seen a good sort of down move, at least 200 points down move, if at all that happens. So better wait and watch and then trade accordingly, because it would be very risky, because volatility is increasing. So option buying will be preferred by the market participants. So this will help the market to decide a tone going further. So better wait and watch, see how the market takes a support at a crucial level, and then only trade. So that was my analysis for the Nifty. Now let's find out what the Bank Nifty is suggesting. And we are also going to look at the rollover data of Bank Nifty and try and analyze what they are suggesting. So if we talk about the option activity range for the next series, I can see that 25,500 and 26,000 is the broad option activity range for the market. 300 points on downside and 200 points on a higher side. Now the option chart data suggests a good amount of call writing on a lower level. So as I can see, a good amount of call writing has remained on a lower side. So 25,500 to 25,700, I can see and observe a good amount of call writing. Further, as we come on a high side near 26,000, I can see the call writing, the pace of call writing is getting increased. Especially on 26,000, I can see a good amount of change in open interest, both in terms of change in open interest, in terms of percentage and absolute change in open interest. So it is suggesting that the market participants are not sure on a high level, even though you will see some sort of bounce. But 26,000 is the cap which the market participants are expecting. So let us check the put chart data, and as we should be expecting bearishness is all over there. I can see a good amount of bearish rollover happening at 25,500, and the maximum change in open interest towards on a actual number wise, and the change in open interest wise is on 25,500. However, the 25,600 has also seen a good amount of change in open interest, aggressive change in open interest. So in short, I am trying to suggest that the put participants are also expecting a down move. Now you should note one thing, that here the Nifty has already broken its 34 days exponential moving average, whereas the Bank Nifty is now trading at its 34 days exponential moving average. So if at all Bank Nifty goes down and takes a support at its 55 days exponential moving average, you should expect the Nifty to come back. Or if the Nifty or the Bank Nifty trades below this particular level, you can expect a bit more downside on a bank on the Nifty only. So this makes sense. I hope I guess this makes sense. So MACD is also trading below is 55 days exponential average. RSI has also broken, and CCI is also gone to extreme zone. Volatility has increased, and as you can see, there is some sort of room as well for the volatility to increase further. And if at all that happens, you can expect a target of 25,040. However, the 25,040, as per my analysis, will be good support for the market unless and until you see a bearish crossover getting accelerated at a lower level. So why I'm saying this, because as you can see here, there is a one support that exists for the bank nifty, and if this level gets broken, then only you can expect some sort of down move. So better wait and watch for the bank nifty as well. So that was my analysis for the nifty and bank nifty. I hope you must have liked my video, and if you have if you have learned something new, make sure you hit the like button, subscribe to my channel, and share it to your friends and family who are also interested in doing the technical analysis. And as always, if you have any doubt or question or comment to make, you can always mention it in the comment section of the video. Thank you guys, I see you in the next video.